On October 30th, 2021, leaders from the world's major economies gathered to end a practice that had been costing their governments billions in tax revenue. The so-called global minimum corporate tax would place a first-of-its-kind floor on tax rates for big global companies. It was kind of a big deal.
This is the most important global economic agreement of the 21st century.
A tax revolution which will lead to less unfairness.
It's estimated it will result in additional tax revenues of around $150 billion each year.
Now it's time for 137 countries to enact the deal that will change the way global taxes for big corporations work. Hamza Ali, a senior tax reporter for Bloomberg Tax, is here to explain.
The global minimum tax rules were created to solve the issue that countries were reducing their corporate tax rates in a competition to attract foreign direct investments and multinationals.
This competition started in the 1980s.
We propose to reduce the maximum corporate tax rate, now 46%, to 33%, to give the USA the lowest overall marginal rates of taxation of any major industrial democracy.
The US wasn't alone. Countries across the globe slashed their corporate tax rates. Big global companies moved to the countries with the lowest rates, which, in turn, kept driving corporate tax rates even lower. This competition became known as
Race to the Bottom.
This race to the bottom lasted decades, and it's one of the reasons why so many American companies like Apple, Google, and Pfizer pay so little in taxes.
The race to the bottom was an increasingly visible problem for the largest economies in the world, but solving the problem for all countries wasn't easy.
After years of negotiating, countries finally agreed on a global minimum corporate tax rate of 15%. So, how exactly does this work? If adopted, would every country's corporate tax rate immediately shoot up or down to 15%? Not exactly.
Countries can set whatever rate they want. They can set that rate at 5% or they can set that rate at 30%. After the deal, that power still remains with them.
In other words, a country can set whatever rate it wants. But if the rate is below the 15% minimum, something interesting happens. The rules are intricate, but using this picture of milk and 2 glasses, here's an admittedly simple explanation of how this works. Suppose the picture is a big global company. We'll call it Milk International. Milk International is incorporated in this glass, country A, and has a subsidiary in this other glass, country B. Country A, called the parent jurisdiction in global tax parlance, has a 20% corporate tax rate. And country B, called the subsidiary jurisdiction, has a 10% rate. Every dollar of profit taxed in country A is done so at the 20% rate, and every dollar taxed in country B is done so at the 10% rate, creating a strong incentive for Milk International to funnel most of its revenue through country B. But with a global minimum tax, country A can force the company to pay it the 5% difference that the company isn't paying in country B to meet the minimum tax rate. This is called topping up. But what happens if the opposite scenario occurs?
Now, in the opposite scenario, if the low tax jurisdiction is the parent jurisdiction, then the subsidiary jurisdiction has the power to top up the tax to take it up to 15%.
Voila! There goes the incentive to drop tax rates below 15%.
The new rules will rewrite all prior agreements.
Meaning that once countries enact the global minimum corporate tax, it will be the new law of the land for big global companies.
Any company that has 750 million euros of revenue globally will be in scope of the rules.
Or about $850 million. But agreeing on the rate and how it would work was just the beginning.
Countries must put in place domestic laws to implement the global minimum tax rules.
The US has its own minimum tax rules. But getting them in line with the rest of the world will require approval from the US Congress. In the end, if all goes well and all 137 countries enact the plan, big corporations will never pay less than 15% in taxes again.
Hi, I'm Carrizosa. I produced this video and I learned tons about the global minimum corporate tax. Did you know that the last time a tax reform of this scale happened was back in the 1920s? You can learn a lot more about this topic on our website, news.bloombergtax.com.